Today's final video for our comprehensive problem. The beard's getting thicker, the quarantine's getting longer. All right, we won't waste any time. Notice over my left shoulder, you might see Bo there. Check him out, Chocolate Lab. All right, so here we go. Closing entries. Why do we close is the question. Why do we close? So I went out and found the quarterly reports on McDonald's quarterly income statement. The numbers aren't important. The reason is why we close. Companies close all their revenue and expense accounts so they can compare period to period, quarter to quarter, year to year, etc. So there's not a rolling balance, if you will. Your revenue and expense accounts aren't going to go up and down. They're just going to go up. You're only going to add to revenue and add to your expenses. So the numbers are going to go up, 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 and up. So we close them. We bring them back to zero every period or at the end of a year. Bo, do you only bark when I'm doing a video? Is that the only time you bark? All right, apologies. So the point is, we close so we can compare period to period to see if we're doing better, obviously improving, declining, etc., what the trends are and how we can fix it. Our managerial accountants, our cost accountants will try to figure out how we can do a better job. Our assets, our liabilities, they go up and down, up and down, up and down, and debits and credits, debits and credits, debits and credits. They're always moving, so we don't close those, but we do close all of our revenue and expense accounts. All right, so closing means bringing the balances back to zero. To do this, we've said this in class a lot, we do the opposite of the normal balance. So you have to know what the normal balances are. Revenues have normal credit balances, expenses have normal debit balances, and equity drawing has a normal debit balance. Now, debits have to equal credits, obviously, with every transaction. So when we close, we have to have an account to close it to, right? What's the other account? All right, what's the other account? So we have a temporary account that we use. It's temporary because we only use it during the closing process, at least in this case. It's called income summary. All right, so the process, pretty much the same. Follow the same steps every time. We're going to start with our revenues. Close our revenues to income summary. Again, do the opposite. So revenues, regardless of how many revenue accounts you have credit balances. So in order to close the account with a credit balance, we debit that account. So list your revenues. In this case, I show an example with 3 revenues. I debited all those revenues. Add those numbers up. We have $90,000, so we're going to credit income summary for $90,000. So we closed our revenues with a debit, credit to income summary, revenues are closed. Then we move to expenses. Expenses are the opposite. All right. As we know, we always debit our expenses. So in order to close an expense, we have to credit them. So we're just going to list them right from top to bottom. All right. Obviously, you're going to have a lot more expense accounts than you do revenue accounts. So our expense accounts are going to be a lot more. Hopefully, it's still less than the revenue though coming in. And we credit each expense account individually. Notice the credits I have there. Add those up, and we debit income summary. Right. So notice that we've had one credit to income summary and we've had one debit to income summary. That's going to happen every single time. Right. Now, the important thing is how to close income summary. Income summary could have a debit balance or it could have a credit balance. It completely depends on your last 2 closing entries. All right. We had one debit, one credit. So you have to get the balance. Subtract the 2 and find out where the balance is. If the balance is on the credit side, then we're going to debit income summary. All right. This would be a good thing. If the balance of income summary is a credit, that means we had a net income for the period. We're going to debit income summary and credit owner's equity capital in this case. Now, if it were a debit balance of income summary, then in order to close income summary in that case, we would credit income summary and we would debit owner's equity capital. This would be a situation where you had a net loss, right? And as you know, in the comprehensive problem we did have a net loss. A little mistake here. All right. So I want to make sure that you notice that this is a transaction you would have used in our comprehensive problem because we had a net loss. So income summary is a swing vote. Sometimes I have a debit balance, sometimes I have a credit balance. You know what the balance is based on the previous two closing transactions. Figure that out and go ahead and close summary. Then we close owner's equity drawing to capital. All right, drawing, D for debit. Drawing has a normal debit balance. So we're going to do the opposite. We're going to debit capital and credit drawing. All right, in order to close an account with a debit balance, we credit it. So in this case, we credit a drawing and we credit it to capital. All right. Now, when you're done with those journal entries, these are all going to go in the general journal. Why the general journal? Well, we didn't sell anything on account. We didn't buy anything on account. We didn't receive cash. We didn't pay cash. So your answers are no to all four of those questions. Anytime you get 4 no's, it goes in the general journal. Make sure that you post all those entries to your ledgers. All right, post those entries to your ledgers. Now, if you did it right, you could just go all the way down your ledger accounts and not go back and forth to check what the number is, because the number that you're closing should be right there in your ledgers if you're keeping up with posting. All right. After posting, all revenues, all expenses, your drawing and income summary should all have 0 balances. All right. And then finally, the post-closing trial balance. All right. Post means after. So after closing. So the last thing you do is a post-closing trial balance. This is nothing more than a list of all your accounts that have balances, which should only be your assets, your liabilities, and your owner's equity capital accounts. So notice you're just going to list them in a row. There's no special setup, no real headings, if you will. Just list your assets and their balances, list your liabilities, their balances, and list your capital. And this basically proves the very first equation that we talked about back in September, that our assets equal our liabilities plus our owner's equity. All right. Notice that asset on the credit side, asset number 4. All right. The all-stars out there should know that that's a depreciation, a contra asset account. All right. Some of you guys thought I made a mistake, right? So we have our assets, liability, and capital, and we're done. All right. We're done. Now, on the comprehensive problem, I did not add a tab for the post-closing trial balance. I'm not requiring you guys to do that. If you went ahead and did it on your own, great. If not, no worries. But we do have to close and post. All right. So hopefully that was a help. I'm going to post this. We do have office hours today from 10 to 11 o'clock. And we also have a Google Meet at 2 o'clock, if anybody's interested. Our assignment is due today, big assignment. We're going to move to new stuff next week. I want to make sure everybody's caught up. We are doing grades this market period. OCC is on top of me regarding moving forward. We are going to have a final exam. All right. You want that credit. I know these are a situation we didn't expect to be in, but we have to make the best of it and make sure we stay on top of things. All right. Contact me any way you can. I'm available pretty close to 24/7 to answer any questions. All right. I hope to see some faces I haven't seen in a while also. Talk to you guys soon.